All right, episode 32. Today we're going to talk about how has technology and a shift in the real estate industry affected the mortgage loan origination business. We are joined by top mortgage loan originator Brent Hicks of Cardinal Financial, and he's going to drop some knowledge on us on the other side. Drop knowledge.
Welcome to the only real estate podcast worth listening to, with your hosts Nick Good, Matt Kelderman, and Brian Force. Combined, they have 26 years of experience and have sold over 1,500 homes. Join them each week as they bring you everything you need to know about real estate. And now, here are your hosts, Nick, Matt, and Brian.
What's up, everyone?
Hey.
How's it going?
It's good, man.
How's everybody looking at me? I don't speak for the group.
I'm
fine.
You just ate that big-ass cookie.
I'm not even a cookie guy at all. I skipped lunch again today. I've had these pork chops sitting in the fridge at work since last Wednesday, and I'm like, every day I'm like, that's going to be my lunch. I got to eat those. And every 2 o'clock rolls around, I forgot to eat them. I got to run to the podcast. I don't have time to heat them up. I got here. They were mopping the little store outside that has the healthy stuff, so I had to run to the little Starbucks and get the only piece of food they had, which was a big-ass cookie, and I was reading the nutrition facts, and I was just like, damn it, Brian.
Well, it's probably healthier than that 2-week-old pork chop.
Last Wednesday's pork chop would clean you out pretty good.
That
may be the better diet food.
That is my diet. I'm like, all right, you're going to go keto, but make sure everything's gone bad, so it really cleans you out.
So we're joined with by Brent Hicks, and Brent is a top loan originator with Cardinal Financial. And I have his bio here, but I'll let you kind of tell us who you are, and you've done over $1 billion in loan production, so you're doing something right.
Thank you. 22 years in the mortgage banking industry. So 1997, I started off originating and went through different, maturation processes. Started off as a loan originator, bartending at the same time. For 6 months, I didn't sell a single, mortgage. And I really used those two other jobs to fuel the straight commission aspect of the mortgage business and launch me in the business. Back then, I was doing manufactured subprime homes, which is low credit score people who buy manufactured. Mm-hmm. That market just wasn't that big. I started brokering loans, eventually bought into a company and merged with another company down the road. And, we went through the Great Recession. All of those things have been amazing learning experiences and helped me to sharpen my mortgage skills, my business skills. And at this point, I run a division for Cardinal Financial. I still originate loans. And, we've just got a lot of people and a lot of experience at this point, and we're having a lot of fun.
So 22 years in it, you've seen a lot, a lot of change, right? So when I first met you, it was 5, 6, 7 years ago?
Yeah, probably 5 or 6 years.
Yeah. And if it's okay to tell that story, you were just re-entering that business, mm-hmm. right? So it's not like you were on this uphill, like you've been killing it ever since day one. I heard your story of during that subprime days. I mean, you were sending out all these postcards, doing direct mail and getting all this business coming in, and then you walk me through that story of what happened when the recession went through.
Yeah, so I started investing myself. So that was one of the earliest principles that I learned in real estate was the richest man in Babylon. Invest in yourself, mm-hmm. invest in others, right? Pay yourself first. And at the time, the tech bubble had just busted. I had 50% of my savings wiped away. Stacy and I were just getting married in 2000. And we were investing a couple of $1,000 a month into mutual funds. Mm-hmm. And so I read the book and I'm like, it's stupid for me to be investing in this stuff when I don't have any control over it. Let us invest in ourselves. And so we did. We took the couple of $1,000 from our business plan on how we're going to be millionaires, compounding interest, all that shit, invested in ourselves. That turned into the beginning of direct mail. And back then there wasn't data. So we were trying to get data from, title companies, MLS, there were ways for us to find data, but it wasn't ubiquitous. And then we started doing mailers, and then we made some pretty good money that month. We invested all of it, and then we just kept on rolling the money forward. And next thing you know, we grew a really big business within a couple of years of just compounding the money back into the business. I was doing about 150,000 pieces of mail a month.
Whoa.
I think that's what a lot of I don't speak to a lot of other entrepreneurs because I don't have a frame of reference, but I think that's what real estate agents don't get, man. I know I didn't. That first big check, I did not roll it forward back into the business.
No,
I rolled it forward into some shoes and a watch and some other cool shit that I thought looked really good. And I think that's important for people to hear, man. Nobody gets money by just pissing away every dollar they get every time they get it.
My first Xenia suit was 100% of a commission check that I got. And now I'm wearing these fucking shorts. I couldn't even tell you which room in my house that suit is in right now, and I haven't worn it in probably years.
Exactly.
So stupid.
So with that though, so you were doing that, and then the crash happened.
Yeah. So we were doing a bunch of mailers. Then rates went up, and then we moved into a purchase business. We grew a really big purchase organization. At one point, I was able to land the largest builder in the country, Pulte Homes. I became their turn down lender, not just locally but nationally.
Wow.
And then we started seeing the signs of it, doing all these loans nationally and in these hot markets like Vegas and Arizona, California. We saw them start dropping prices where people were lined up and they were contract, 6 months out. People were waiting in line to buy houses. They dropped them $100,000. Now, everybody who bought a house 1 day ago, 1 month ago, 1 week ago, 1 year ago, are all underwater.
Yep.
And so that was the beginning of it. And right then and there, I was investing in developments and real estate. I mean, I had multiple $1 million specs about to go up, and I canceled everything. Like everything I could get out. I'm like, okay, something's not right. Something's not going to end well, and the market's shifting. We started seeing our bid tape. So we were selling first and second liens. We were sending them out, and we were pulling these loans together. And the first set of second liens came back, and we thought we'd executed about 102 cents on the dollar. And the bid tape came back at 80 cents on the dollar. And in the time it took us to repackage that and send that out to somebody else to bid on, then they gave us a lower bid.
Jeez.
And that was the beginning, right, of the paper not performing, the assets being undervalued. And we could see the writing on the wall, and it wasn't good, but we didn't think it was going to get as bad as it got. The market blew up. Everybody starts filing bankruptcy. Mortgage companies start going out of business left and right. I mean, you had Lehman Brothers.
Yeah.
AIG had to be built out. Like everybody it was a bloodbath. And then rates started getting good again, and we started doing our mailers again, and business was going really good. I mean, I was closing as many loans as I had ever closed again in 2008 and 2009. But now we had this regulation that was coming in, and there was the Dodd-Frank introduction that was coming. And I really felt like the mortgage industry wasn't going to be the same. The thing that I had fell in love with was forever going to change, and I lost my passion for it. And taking a step back, 2 years when all that other stuff was going on, I was investing in other deals, right? I was trying to, instead of me work for my money, have my money work for me. I'd invested in this technology that was a water technology, and we spent about 1.5 years proving out this science that, we wanted to see if this thing really did what they had hypothesized it did. So in 2009, we got the science back, and we could validate in vitro testing and in vivo testing that this thing did actually lower inflammatory markers and a bunch of technical stuff that was way above my pay grade. So I'm like, okay, here's an opportunity for me to go do something different. I had a partner that had been very successful. He was one of the guys that took Realtor.com public, and he was the main investor. We raised a bunch of money. We put up a bunch of our own money, and we started a direct sales company. So I got out of the mortgage business completely to start this other company.
Really?
Yeah.
So what got you back in?
There's that old adage that if you let someone go and they come back, you always had them, right? If you love someone, you let them go. And I really felt like that was me in the mortgage business. I was burnt out. And 6 months into it, I'm like, okay, I'm a freaking moron, because I walked away from a business that was generating millions of dollars in revenue, and I just walked away from it.
Yeah.
Okay, well, I'm a fucking idiot. I don't have to burn one down to build another. Right? That was a good lesson.
Yep.
And, I was seeing all these similarities in this direct sales business that we're building. And the direct sales business is a lot about belief, but there is no carrot and a stick. It's a part-time army that you're trying to build. And so you only have a carrot. So you have to do that through inspiration. Yeah. To inspire people to believe in something, to take action. And there's a lot that I learned through that process that I kept on going back and saying, man, if I had a whiteboard, I don't have anything that would hold me back from recreating my mortgage business. Because once you create a business, there's always these constructs, these confines to it. It's like I built a boat at first, and that boat was a pirogue that I was going to be in a pond, because that's all I knew. And the next thing you know, I'm in that pond and I see this lake across the street and it's bigger, and I want to get in that. I start building the boat bigger and bigger. Next thing you know, I want to get into this huge lake. Now I have to, at some point you can't keep on building on to what you have without changing everything.
Right.
Getting back in the mortgage business, I could say I want a vessel that's going to help me sail around the world, because my perspective was different. And what would I do differently? Like, the first time I built a mortgage business, we were very, very focused on how many transactions. At one point I was in the top 10 in the country out of 500,000 people in transactions. I did that many of them. And I realized that was the wrong focus, right? I wanted to build something that was really based on experience. And people don't remember what we say, they remember how we made them feel.
Yep, sir.
And I really okay, this is a different calling for me, and this is a different perspective, and I want to do it better than I did it the last time. And so that really drew me back in. But it took me years, because at the time I was CEO of this business. I've got tens of thousands of distributors, and I've got a sense of loyalty to them, right? I'm the CEO and co-founder of this business, and I just can't exit it, because if I did, it would create a distraction, create disruption, and then I harm people. And that was a burden for me for a long time, right? I was burdened with the fact that people's mortgage payments and kids' school and all these things came from this business, and if I disrupted it by going and chasing what I wanted to pursue, so it took me a couple years to unwind it, and I had to do both for a while. I had to start the mortgage company back and then stay as CEO, and then I slowly moved myself from operations and then hired an executive team. And the last year, 18 months, I've been free of my responsibility outside of being a board member of this organization.
Yeah, I love the idea behind like the patience it takes to wait something like that out.
Yep.
Right, because in my head, everything feels so frantic day to day, right? And I imagine everybody feels that way. But I just think about like just the way you just kind of laid all that out, the patience it would take to go back and unwind a business and a thought process that's transactional and intentionally move it to this relational, deep-rooted kind of connection with people in order to grow through that. It's a massive, massive mind shift, and I can't imagine trying to go through that.
Well, and I think that you said something really, really, I think that was really important that I think that all of us struggle with in this room, and I think every leader does in some form or another at some different time or another. Is I know that one of the things that I really, really struggle with in leadership is that, like, it's so difficult for me emotionally when people don't understand my vision, right? Especially because for a lot of us in real estate that already run relatively big businesses, take us bringing on new agents, for example, right? Like, I can already see what your future holds because I'm living it, right? Like what the possibility is if you really buy in and things like that. That's a challenge though, right? Like that's a challenge to translate what you already know and inject it into someone else's psyche and have them really buy into it. From somebody who's built a massive business, walked away, built another business, come back and built the original business up again in a different way. I imagine that took some pretty challenging steps as far as leadership goes. How do you keep people engaged in seeing that bigger vision as you're building these things?
A lot of it is through casting that vision. A lot of it's through communication. A lot of it's staying the course too, right? I mean, find someone that has what you want, do exactly as they do, and you'll get the same result. Modify, you'll get a modified result. That's a Tony Robbins quote.
Yep.
And I'm reading a book right now about the Koch brothers, Kochland, and it's been pretty freaking good, man. Just hearing the story about the vision that Charles Koch had and how long in the tooth he was. I mean, how far out that guy was in investing and looking for long-term returns only. So much of that just applies, right? If you know that something is right it takes time. People want to cut corners and they want everything now and instant gratification. People overestimate what they can do in a year and underestimate what they can accomplish in a decade.
Yep.
And that was something that I learned. And so that's something years ago, and that's something that we've been applying, right? It's been a 10 to 20 year vision of what we wanted to create and build.
Yep.
And every day we're just laying the bricks towards that. And at some point, we'll get to that destination.
You'll probably find there's some other place to go.
Yeah, there's a cool building, the cool spot right across the street that we want to build too.
Yeah. So with that vision, right? So in 2018, when you and I, we were kind of talking about the disruption that was going on, right? That was kind of that buzzword, and technology is going to, ruin all of our industries. You had made a change with technology being kind of the forethought, changing from one company to another. Where do you see, did 2018 come true in terms of, we were hearing a lot of news that there was going to be commission, compression, that there was going to be mortgage loan originator, the shops were going to close down, and a lot of mergers happening. Did that happen? Because I didn't hear a lot of that stories.
Yeah, there were definitely acquisitions, mergers of companies that were not making their obligations, or they weren't able to have their liquidity available to be able to keep their warehouse lines. I mean, a lot of that did happen. It didn't happen to the degree that we thought could happen, and that's because none of us thought that rates were going to fucking drop the way they just dropped, right, in the last 9 months. That has provided a lot of oxygen, a lot of ground cover for companies that may have been failing or may have been having difficult times. I mean, Q3 and Q4 of last year and Q1 of this year, companies weren't making money. And there's only so long that your warehouse lines are going to let you, without curtailing you and haircutting you to death. I mean, they're not just going to let you keep on doing that. Or Fannie Mae comes in, does an audit, or you get the CFPB that comes in and does an audit. So refinances and lower rates has given oxygen to a lot of companies. 2018 didn't play out exactly like I thought. It didn't play out exactly the way I thought it was going to in our business. I'll tell you, 2019 has been better than we could ever imagine as far as execution of that strategy. Like, I went over and I partnered with a guy, Nick Flores, that I had partnered with before in the 2000s, and I would still be with Nick in the original company had we not gone through the tumultuous times of 2007 and 2008. And it's because this guy is a technology guy. He's a computer science, nerd that happens to know how to manufacture mortgages and been in the mortgage business his whole life. I firmly believe now even stronger that technology is a big piece of where things are going, because there are costs. There are real tangible costs in manufacturing anything. And the cheaper you can drive your costs down, the cheaper you can manufacture something, well, then the cheaper you can give the product to the end consumer. Or in our business, right? So when we look at it, we have to drive costs down corporately.
Yep.
We got to drive costs down at the branch level. We got to drive costs down at the originator level. All of that allows us to keep compensation up. It allows us to deliver a good rate and fee combination to our consumer and to our branches. All of those are important. We firmly believe that the market has shifted towards, they want a consumer direct price, but they still want a retail experience.
Right.
So what's the hybrid? How do we blend that, right? How do we bridge the gap between the two?
Well, that's what I was going to ask. How do you remove the cost without taking away some of the human element?
AI.
Yep.
Automation.
Yep.
Intelligence. And what's really cool about the things that we're doing is we're no longer treating the symptoms. We're diagnosing the root cause of everything, and then we'll fix it permanently. Like, we eradicate shit from our process. We find something that happens, and then we'll automate it where it happens every single time.
Yep.
And it may not seem like a lot, or it may not seem like a big deal, but we're changing the way that mortgages have been done, and we're changing the lives of our originators and our processors and everybody in the process. And now their ability to be able to take on more is exacerbated. Like, normally a processor could do 20 loans a month, and that's a good month. I got processors doing 40, 45, 50 loans a month.
Yep.
Well, that means that their bonuses are pretty good.
Yeah.
But I don't have to hire more people to do that job, right? I mean, loan officer assistants, we've been able to drive the cost down on that. I mean, we've automated so much. We still need the people, but we don't need as many people.
Yep.
And we can deliver a better work product at the end of the day, a more consistent work product and a faster one.
Yeah, 100%. What do you think that does to the industry long term? Because I feel like obviously, and I'm a pure capitalist through and through. So I just like to play devil's advocate. Doesn't that long term just completely annihilate the smaller shops in a lot of ways that don't have the ability to automate and drive their costs down the same way?
Well, I mean, quite honestly, in competition, I want to annihilate anybody.
Yeah, I was going to say, not that.
Fuck, look, you're my competition.
I'm not saying it in a way like I'm saying I'm fighting for them and it matters. I'm just making an observation.
Everything, every single day, the only thing that's certain is change is going to happen.
Yeah.
Well, and the market will dictate whatever that is,
If the
right?
consumer can get a better experience, they're going to make their own decisions and the market is going to react, right?
Yeah.
Like that's, if the consumer does not like the experience that you put forth, then other people are going to have a chance in the marketplace. If not, then it means you did your job. Yeah. And they have a better experience and a better product.
And forever there have been low-cost providers. I mean, Costco and Walmart have been around forever, right? People go there because of cost. We're just doing it a different way. We're just driving the cost down of manufacturing so we can deliver a lower price, but keep the standards of what we're doing up higher.
So where does that go in the 5 to 10 year mark? Because you see the bigger brokerages starting to get into the mortgage world, and that was a lot of noise in 2018. I don't hear it so much this year. That seems to have kind of quiet off. So where do you see it in 5 to 10 years from a branch manager owner standpoint?
There's going to be more competition, right? I mean, at some point, Amazon is going to be in the game. How well they do, who knows? Their history is they do pretty fucking good in those things that they have, and they can do it at a loss, right? I mean, so many test cases or studies on that. They want to get in the diaper business, right? They go lose money for 3 years.
Well, they've sold hard goods at a loss. They sold Kindles at a loss for years. So they're willing to do shit like that they create just to lose money. It's worked out for them.
Just to get market share, yeah. Because again, it's like that Charles Koch vision, long-term understanding that, yes, we're going to spend 10 years, but in 10 years we're going to have 7 or 8% of the business.
Yeah.
And so I think that's a big reality of how things are going to continue to evolve. We're going to continue to evolve our technology, automate, and we believe we'll continue to take market share and be able to allow these branches to not just survive, but to thrive, because we're giving them a way to do so and stay relevant. I think people still want relationships. It's still a relational business. I don't think people are going to go buy houses without a real estate agent. And I think people still want someone to hold their hand to make them feel good and to help navigate them through a mortgage, right? There's still a Rubik's Cube that has to be thought out. There's still humanization that has to happen. It's just what's the blend between what we can automate, make consistent, and what we still need on the relational side.
Well, I think that's such a good point, because I think the biggest targets of the automation of the more human shops in general are going to be people like Rocket Mortgage, Quicken Loans, things like that, because if they're only able to keep their competitive edge because they're fully automated, basically. They have almost completely removed the human element, which means I am going to them with the idea that I am just doing this for the lowest rate possible, and I'm probably going to have a shitty experience, right? If you can drive costs down to a point where you can match rates but maintain the human element, they have no real... They would have to rebuild their business from the ground up to match what you're doing from an experience standpoint if you can match their niche, which is super low rates.
Yeah, and there's multiple niches, right? So, as we're talking through this, look, this automation, complete automation in the mortgage business is there, and it can happen. But you're looking for more of the cookie cutter, the 780 FICO score, W-2 bar, who bakes at Bank of America, who literally you could do a verification of employment, automated through the work number. You know what their income is. they sign up where I can hit their bank account. I can see how much is in their account. I can see what their 2-month average is. And then I get a designation of fine. I get an income waiver, an asset waiver. And if they put 20% down and they're buying in like McKinney or Frisco or somewhere where you've got a bunch of comps, you're likely to get what we call a PIW, which is an appraisal waiver.
Right.
So there are those bars that you could completely automate. And really not even have the need for an underwriter, because I got a waiver on the appraisal, I got a waiver on the income, and I got a waiver on the assets. What am I really underwriting at that point? Nothing. But what about the rest of the population?
Right.
And then what about the population that is underserved that used to be a big part of the market that's coming back, which is, the subprime market, the Alt-A market, the self-employed borrower that has had a difficult time buying a house even though they do have good cash flow. Those loans are going to become more ubiquitous, right? I believe all markets have a short-term memory. The pendulum always swings in both directions too far, overcorrects, and then, the market, forgets.
Well, that's where I was going to go with this, is what do you see leading to the next major economic downturn?
I think real estate prices will come down. That's a cycle. We can't stay up forever. Unemployment, jobs, geopolitical. Right now, we're in this whole world economy thing that we haven't had to really contend with, right? We have all these pressures of things that aren't going on inside of our country. And, we have an election coming up. And however that election goes, one way or the other, it's going to swing things in one direction or the other.
That might be. It's just hard to pinpoint, right? Like, hindsight is 20/20. After the next economic downturn, we'll look back and be like, oh, well, fuck yeah, right? Like, it's real easy in 2013 to go like, well, yeah, the adjustable rates were all going to kick in the same narrow window. Like, how did nobody fucking see this, right?
But it's just hindsight, right? One guy saw it.
Yeah, well, a couple, and then, that's how you end up in Hollywood, right? No, but like, it's very hard to have that type of foresight, but then it seems like always looking back, you're like, why didn't we see that?
That was right in front of me.
Yeah, I like to get people's opinions on those things.
But that recession was the last great recession was caused by real estate and the arms, right? That was more on that. They're saying this next one, the predictions, it's not going to be as bad, right? That was the worst one we've had, right? Was that worse than the 20s? I thought.
No, the 20s was worse, but that was the Great Depression. This was a Great Recession, but we were on the verge of being a depression had the Fed not stepped in and saved the banks, right?
Yeah.
Too big to fail. Had they failed, we would have been fucked completely, and there would have been a run on the banks, and banks wouldn't have had the money because they lend it out, right? I mean, that's the way that works. Is you get a 10-to-1 leverage on the deposits, so there's only so much liquid that they have, so it would have been a complete shit show. And a lot of it was fueled by exotic products. Like people didn't have money into these deals back then. Somebody buys an investment property, they're going to put 20% down. And based on the way that the market is, the compression at the rate stack, I mean, most people put down 25 and 30% on investment properties. So there's real money, there's real equity. So, mortgages are actually performing really, really well. The only 100% products really out there are VA loans, and VA loans perform very well.
Yeah. Well, because their standards are really high, So I get that. It's difficult in this day and age because we are in such a world, or such a global economy, and everything affects it. Like I feel like whenever the next downturn happens, it's going to be a lot more forgiving in hindsight to be like we didn't see it. Like, I mean, even the tech bubble, right? You look back and you're like, you mean you can't just create a domain and go public? Like that won't work out in the long term? If we all just start investing in invisible companies, I can't believe that shit didn't work. Like, I feel like whatever happens next in the economic cycle will be on such a more global scale and kicked off by something that might not even be domestic. That is scary in a way, but it's also a little bit more like, all right, we can forgive ourselves a little bit possibly. It's not like, I don't know, it's like looking back at older generations and like wondering how the hell they put carpet over real wood floors, right? Our generation would never do that.
Right.
Never.
No, they just tear down a 1940s Tudor.
Yeah.
Put up some dumbass house with 0 lot lines in the middle of a neighborhood.
But it's worth $2 million.
Yeah, exactly.
Right. So I kind of want to jump ahead a little bit. So with the way the industry is going, right, are we going to start seeing more mortgage companies generating their own leads and handing them out to agents and becoming, maybe that's the platform that we're going to start seeing more. There are some companies that are doing that, some decent sized ones. Our the former Keller Williams CEO was a CEO of Mello, and that's what they did, and they're a branch of Loan Depot. So do you see that going any further in the industry? We're going to see more of that.
I think you've got big companies with deep pockets that have the ability, and that is a big part of their game plan, right? I mean, it was a big part of us moving and making our move, right? That move to a company that was the third largest buyer of online leads. It was a big part of our business plan. You still have the mom and pop shops and the people that aren't investing in their business, right? So I do think that there is going to be evolution. There's going to be a shift. If people can't afford to invest in their business, it's going to be hard for them to survive.
I think that's such a complicated matter, though, right? Like the massive scale lender lead generation approach that works essentially not only to generate more loans, but to build relationships with realtors and obviously grow the business on a referral basis and things like that as well. Because, again, going back, like, there's still the human element. Like, I just fundamentally believe, and it's such a mean thing to say, but I say it on the show all the time. I'm going to say it again. Like, I think most realtors are really shitty at their jobs. And there's just, like, there's an element there where is it cost effective? Like, how far down do you have to drive your cost per lead to hand them off to basically 87% of our industry and still get a quality return on your dollar, right? Rather than just building genuine relationships from the ground up with people that you want to invest in long term that will reciprocate that as well, right? Like, it's the Loan Depot sort of methodology in which they're using it acts as an attraction based model to develop more relationships, I think is a less profitable model long term than fundamentally building relationships with quality operators and then helping to grow their business. Does that make sense? Am I just rambling?
No, I get it.
And I think a lot of the big consumer direct, the side of the consumer direct, right? I mean, then you have people that are only focused on inbound leads and they're not building relationships. And those aren't people that you may want to reciprocate. They give you a lead, you may not want to reciprocate back with them because they're not really set up the same way, right? Yep. It's a volume, speed, play, and there isn't the service. I mean, right now, if you go online, you go look at any of the big banks, I mean, they're 120 days, a lot of them, on locks. Like, they won't do a refinance. You try to go get a jumbo refinance from any one of the banks, and they're going to take you 120 days. They're losing loans left and right. They took where rates used to be the same for a refinance and a purchase. Yeah. Traditionally, right? There's no difference. Right. Cash out, there's difference. Right now, you go look at these banks, and their refinance rates could be 5/8 higher than a purchase rate. Really? Because they're saying, hey, we don't have the time, we don't have the capacity, we don't want this, and if you're going to give it to us, you're going to pay for it. Yeah. That is a different between, a pure consumer direct, right, and someone that has retail, right? You go in the retail world, and it's like people are still knocking those things out in less than 30 days. Yeah. That is such a foreshadowing, right? Like, the big banks have always been more automated and generally had a smaller selection of products and longer closing times because of automation was not what, like, when you involve AI and things like that, of course the entire process changes. But I think that is generally the consensus on pure automation, is that it is going to be rockier, slower, and you're going to have to pay a little more for it.
Well, at the end of the day, like, I think when Brent was talking about how his business is automated but only to support the staff, you can do two things with that places like Bank of America can't do, because you're still paying a shitty salary to somebody who doesn't really care all that much about how fast stuff gets done. Right. If he can double the amount of bonuses his underwriters bring in through certain types of automation, now instead of having to have 5 people who are mediocre, you get the 2 best because you pay the best. Yeah. You give them the least amount of hassle. Right, they're going to stay, so you have longevity. You're not bringing more people in. That's what I think. That's the best part about using automation. Brian and I were talking about this on the way over here about how we automate more stuff for our team, but at the same time, like, there's some shit that they don't really deserve to have automated, right? Like, you know what I mean? So I just think that's really cool. You can bring on better talent, keep them longer, and pay them more. Where a place like Bank of America, man, they're They're getting some dude who failed at doing. We did this exact same thing talking about a commission objection with a discount broker. Here's the thing: if that agent could get 3% or whatever the going commission is in your market center, as opposed to having and go and be some. And look, I'm sorry to the discount folks who are watching this. I don't really care, but to an agent who would rather go and be a salaried employee for a broker somewhere else. I guarantee you that agent would rather have the 3% commission structure than go and make some freaking, some percentage of whatever they take off the consumer.
The fact that they're taking a salary shows a lot about their...
That's their value. That's your objection handler to that. Mm-hmm. That's your value prop is like, I can do this. That's why I can still be here and have a business not supported by somebody else.
So Brent, what's now as it is evolving, what is your value to your real estate agents?
I mean, it is definitely speed, efficiency. We can get stuff done that other people can't do because we're selling directly to the agencies and we're servicing the loans. Most companies are underwriting to someone else's guidelines. So you take Fannie Mae, Freddie Mac, or Ginnie Mae, which is FHA, or you take VA. And then if I'm selling to SunTrust and Wells Fargo and Chase, I'm going to take all of their overlays and then maybe put a master guideline together. Or the person has to understand, if I'm selling this loan to SunTrust, then this deviation right here I can't use to sell to SunTrust. We do things that other people aren't doing. Because we're servicing 80-something% of our loans, we'll take an FHA bar down to 520's credit score. I don't know anybody going below 580. No. I don't know other people that don't have overlays on stuff like that, but we're able to take a bunch of that risk out and deliver the loans the way that they're supposed to. I know that the experience that we're giving to our consumer is bars down better than anything else that I've ever experienced. I mean, I can take a 30-day contract and get it done in 9 or 10 days without batting an eye.
Mm-hmm. What do you think, and that actually brings up a good point, what do you think on the agent side is the biggest gap in, I would say, knowledge or skill or understanding of the mortgage side that your typical agent I think needs to shore up? Like, I feel like just for the most part, real estate agents don't understand mortgage on a high enough level, like across the board. And it shows up in their business, right? There's leads they'll just write off completely and just drop off the map with because they feel like they can't get them approved and stuff like that. They don't fundamentally understand that different lenders offer different strengths, weaknesses, like special stuff like that, right? Like, what do you think is something that you see on a consistent basis that you're like, man, I wish every real estate agent knew this?
It's always just a jigsaw puzzle, right? It's understanding what the person has in assets and how do we make that work. And a lot of times it's a bar that someone may not think is qualified or can buy, but they can buy. Yeah. There's a DPA product with a seller concession, right? I mean, now being in a market that we're not selling for 104%, of list price has helped. It's helped the buyers. It's helped buyers come back in because there is a way to structure a lot of loans where someone doesn't have money, but yet we can do 100% DPA loan with seller concession of $5,000 to cover the closing cost. I think it's just understanding that aspect of it. A lot of times people hear the word FHA and they think old school, like, oh shit, man, this house, the appraiser is going to beat it up and you got to do all this stuff to it. And that's just not the case anymore. Or there's the misnomer of VA, like there's just all this cost that the seller's going to have to pay for the veteran now. Yeah. I mean, that stuff's really gone. Yep. But those were old school thoughts that were taught time and time again, right? It's like the story about the daughter and the mom, and they're cooking Christmas ham, and the mom's sitting there cutting the ham bone, and the daughter says, "Mom, why are you cutting this ham bone?" She said, "That's the way we cook ham." She goes, "Well, why?" She goes, "I don't know. This is the way we cook it. This is the way we've done it." She goes, "Well, why?" "Well, call your grandmother because this is the way your grandmother taught me to do it." And she calls her grandmother, and the grandmother said, "Well, back when I was a kid, we had an oven that was only like 16 inches wide, and so we had to cut the ham bone off in order to get the fit." Yeah. And there's just a lot of that just gets taught, that people don't think outside the box. Yep. And they're limited, right? I mean, 99% of companies use like 2 or 3 mortgage software. Yeah. They're limited to the technology that they have, to the confines of the way that person thought about the business, and they've always thought about the business. we don't think about it that way.
Yeah.
We don't have any rules besides the regulations, but if we want to put this thing before that thing, we can absolutely do it. So I think we've turned the process on its head, which has given us speed, efficiency, and then it's given us the ability to lend without fear.
Yep.
Because we also have technology on the backside doing things that you had to have humans to do, auditing, verifying, validating. We have the lowest or one of the lowest defects from any seller to Fannie Mae right now in the country, because of technology and automation, which means we get a better what's called G fee from Fannie Mae, which that correlates into us getting a better price. We have the same G fee that Wells Fargo has, and we're definitely not the same size.
Right.
But when you have good technology that allows you to deliver a good product, now we can compete with anybody.
Well, I can give a testimony out that you're outside the box thinker and getting deals done. I mean, we've had you and I have worked together before, and we've had clients that other lenders said no on, and you were able to get it done. So, in my opinion, every lending company should be able. If someone else can get it done, my thought process is that previous one that denied them should have been able to figure out how to do the deal. Yep. Right? That's just how I always think. But it goes to show you the company that you choose to work with, and also the loan officer that you're working with, right? I think a lot of real estate agents, too many times, they think all lenders are the same, right? The same way consumers think all real estate agents are the same, we view lenders the same way, and it's not true.
It's just not true at all.
Not true at all. So
I mean, it's like anything. If I was a hitter, if I had 10 at bats in Major League, right? Okay. How many times have I seen this fastball? How many times have I seen a Major League curveball? But if I'm a guy that's been playing for 12 years in the major leagues and I've seen everybody, day in and day out, I've got experience, right? I know how this person is going to potentially throw that ball. I know when they line up. I know what's going to happen. Yep. And I think that's the same thing in any business, right? If I deal with an experienced real estate agent, they're more likely to have overcome a problem that may arise on my deal. If they've done hundreds or thousands of transactions, you deal with a loan officer that's done 2 or 3 loans a month over, that's the 35, 40 loans a year. Over a 10-year career, they've done 400 loans in their career. I may do 400 loans in the next 6 months or next 5 months, right? I mean, I've just seen the ball. I've been at bat more times than most people.
Yep.
And have seen more problems and have solved more problems. And for me, it's not even just about my loans. Right now, this month we'll fund 450 loans in my division. Well, 450 loans, there are multiple problems that come up on all of those. Shit doesn't roll downhill, it rolls uphill. And so I find it as a blessing, though, because I get to learn every month from those loans and those experiences. Yeah. And then the compound effect, it just continues to generate faster and faster and faster for us.
That's awesome. Love it. Where can people find you?
BrentHicks.com. Yeah, my website. That's probably the best way to go.
That's easy enough.
Yeah,
that is.
Yeah. Do you have a Brian's billionaire idea this time?
Derek, do you know how to paint?
Can't say I am a painter.
All right, well, we'll have to hire somebody then. I don't know how good this is going to be. It's half-baked at best, I'll tell you. But I was thinking about this earlier today. I'm going to do a social experiment. I'm going to create a utopian city. It's going to be like 10,000 people. I'm going to pay for everything. It's going to be purely utopian because it's going to be like they're going to win a contest that like they get to go live in my city. Like everything's free. I'm footing the bill. It's all part of an extremely violently narcissistic like social experiment on my part. But they don't know that. So they're just going to be like, we won the contest. Free everything for life. We're going to live in Brian World. It's going to be great. Everything's free. We're going to take votes on like what you should have there. So like tons of just candy and theme parks and like lots of stuff. Everybody's going to be super pumped. But the caveat I'm not going to tell people, and I'm going to let them learn this on their own, is that once a month I'm going to paint over one of the underpasses on my highway with a cement wall that looks like the road in front of you.
This is a fucking Wile E. Coyote situation.
Yep. And we're not going to tell anybody, Derek. We're just going to let them learn for themselves, right? 1 month into Brian World, someone's going to die in a horrific car crash. And I'm going to act like I didn't fucking know anything about it. I'm going to be like, you darn vandals doing cement walls again. And I'm just going to pretend like it was an isolated incident until next month. Same fucking thing, Derek. Someone's going to die in a fiery blaze from a tunnel cement wall. And then one of two things is going to happen, Derek, and this is where the social experiment comes into play. Either these people are just going to accept that out of the 10,000 or so people that live in Bryan World, 12 of them a year are going to die. And they're just going to go on about their lives just accepting that notion, and they're just going to be like, you know what, everything's free. I'm in.
That's a chance I'll take.
We're all going to die eventually anyway, Derek. Just a bunch of Vin Diesels living a quarter mile at a time in Bryan World. Or everybody's going to drive like 5 miles an hour.
Yeah, they're going to get up and touch the wall first.
You'll have a city of 10,000 people, and the traffic is just going to drive people insane. They're going to start killing each other, Derek.
I don't know if you can do the bridge trick more than once.
Because that's what's going to happen.
Unreal.
Derek, we'll find new ways, but that's the social experiment. You're going to have half the town that just wants to roll the dice, and they're going to be sitting in traffic behind the half that doesn't, and it's going to cause an all-out war. And what I'm really doing, Derek, is I'm just highlighting how stupid road rage is. And then I'm going to make a documentary.
Oh, Jesus.
And I'm going to release it in the public. I'm like, you see what happens when we act all tough behind the steering wheel? People die, Derek. People die every day because of this nonsense. You need to cool it. Road rage people in America. See, there was all a lesson at the end, Derek. There's always lessons at the end.
Brent Hicks, thank you so much for coming by today, my friend. We appreciate it.
You bet. A pleasure being here.
Derek, get us the hell out of here.